Want to like maybe comb your hair?
Well, I didn't know we were starting the show yet.
That's how the kids are wearing it these days. They got the alpaca look going.
No,
Spencer's hair is too straight for the alpaca look.
It's a broccoli head. That's not what Steve has, but the kids have broccoli heads. Look?
I just shake it around a little bit.
It's a broccoli. It's not an alpaca.
No, I had broccoli last night, guys.
Dude, they all got broccoli heads. These kids, their hair looks like broccoli.
How much garlic do you put in your broccoli?
All of it. As much as I have.
All the garlic goes in.
And Rose made mashed potatoes last night. Heavy garlic as well. Bomb mashed potatoes.
I haven't eaten since, what's today, Wednesday? I haven't eaten since Monday night.
Wow, Spencer Israel with the 2-day fast. I see you, dog.
We're gonna go until tonight. We're gonna go until tonight.
What are you having for tonight? Cheeseburgers and fries?
Honestly, have not thought about it.
Dude, I'd be thinking about it 24/7 if I hadn't eaten fucking 2 days.
Yeah, like Spencer,
that's all I think about.
Yeah.
When you break out of fast, you have like a celebratory meal.
No, you're supposed to do you're supposed to do it like correctly. You're supposed
to ease into it.
If you have burgers, it defeats the whole purpose. You have to have like like protein, vegetables, right? Like
plus your body doesn't want it. I know Strazza hasn't gone more than 2 hours in his life without eating.
I've done it, guys.
You don't want it. You want some protein. You want some salmon or some chicken.
Yeah, you got just some vegetables, some protein, maybe some fiber, right? Like
I have to report that last night we had a little Wagyu situation, JC. We did it with hot stones. Sat at the table, got the dinner ready, sliced the Wagyu, put a slab hot stone. I'm never going back. That's the way to do it.
Yeah,
that's a good way to do it. I mean, it's a classic move right there. I'm surprised it took you this long. You've done it. We've done that together, haven't we?
I know. But we're gonna do it that way.
And you got a special stone that you stick in the oven and heat it up.
Yeah, and then it's got
what kind of rock is it?
It's granite.
It's granite. All right.
Yeah, worked good. It worked well. Otherwise, you cook the Wagyu and they're so small. You cut them, a minute and a half goes by and they're cold.
There's a restaurant called Black Rock. And they do this.
Yes.
They
do this.
Yeah. Not Black Rock. Not our Black Rock, but a Black Rock.
Our Black. I like how that's our Black Rock.
Yeah.
Well, we got things happening in the market.
Yeah, I know.
Folks.
All right. Let's go.
What do you think? Shall we?
This is going on way too long.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah. Hit the ground, then it go off. Yeah. I can't take no loss. I don't even know what it costs. Yeah. I hit the ground, then it go off. Yeah. Hit the ground, then it go off. Yeah. Run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Those cold opens are lasting way too long. Let's try to speed things up here. Good morning, everybody. This is the morning show. Spencer, Steve, JC, Alfonso. On today's show, we got Kenny Glick and we got James Brodie from across the pond, Onyx Capital Group. He'll be on the show at 9. Very excited to talk to James. We had him on, I want to say it was late last year. He's a CMT, great guy. Send us over a few charts, so that'll be very great at 9. We got a lot going on today. Obviously, we should talk about the price actions from yesterday and the weakness there, but today is a busy day. I don't know if you heard, but we have a new CEO at Target that may or may not come up. It might. I don't know. It's just a busy day. We got a lot going on today on the channel, in the markets. So if you are watching us on YouTube, do me a quick favor, hit the like button. I would appreciate that. If you are watching us on Stock Market TV, hey, say hi. And a PSA, speaking of Stock Market TV, today at 2 o'clock Eastern time, I mentioned it's a busy day. We timed this specifically with retail earnings, but Jeff Mackey is going live at 2 to give his thoughts on Target and his Q4 retail playbook and unveil his brand new Mackey 30 index. So that's all going to happen at 2 o'clock today. The link, it's a free event. The link will be the link is actually in the chat. I'll throw it up on the screen via QR code in a moment. Let's bring on the boys, shall we?
right. I have a question for everybody today. Mr. Spencer Review, if you could throw up slide 2. Why is it that people get so angry when there's a lot of SPACs out in the market? What is it that upsets so many folks about the old special purpose acquisition corporations, the blank check companies? Why do people get so upset about it?
No, they're not upset about it. It's like, oh, here we go again. That's what it is, right?
What does that mean?
Well, there was a gigantic, you could call it a SPAC bubble, right? In 2021. It started in 2020, really. I guess DraftKings was the first major company to go this route, at least in this era. Obviously, SPACs were big about 20 years ago, but that they opened the floodgates, and then you had hundreds of SPACs go public from late 2020 to like mid 22, and almost all of them have gotten washed completely dead. Huge 50, 60, 70, 80, 90% drawdown.
Isn't that a good thing? Then why don't just these people that are so angry, why don't they just short them?
Yeah, I agree.
You probably could.
But I don't understand how anger and rage fixes anything. Why wouldn't it, like, if you're so sure that these are such pieces of crap, why don't you just short it and make money? Like, well, I don't see the problem.
Yeah.
I think this whole trend in SPACs is misunderstood, and really they have a bad name when they don't serve it. This is simply about speed to market. I don't hear anybody pointing their fingers at the government saying, did they stimulate the economy too much? That's the reason why all these companies were tripping over themselves to SPAC during the last cycle. We overstimulated the economy.
That's right. And it was very clearly like a cash grab, like companies that had no business being public. But like that SPACs have a purpose, right? You're right, Steve. It is easier to go public via SPAC than it is an IPO. It takes way less time, way less capital. That's fine. That's totally fine. But that creates conflict, because there are companies that maybe shouldn't be public, that wouldn't survive an IPO roadshow, that can go public via SPAC. And you just have to know what you're buying, right? Caveat emptor, buyer beware. That's the bottom line.
I'll just share my view on this again as somebody who used to work in the industry. As somebody who used to audit IPOs, I'll tell you, IPOs are overrated.
Oh yeah,
you don't need them.
Oh yeah,
roadshow going around.
What's this Chamath lady that they're always talking about? What is that? What is a Chamath?
You know who that is. He was going to have
woman.
He was going to have 26 different SPACs. He didn't. I think he had like 4 or 5.
Oh, it's a guy.
Yeah.
And then what does he do? He had 26 SPACs?
No. That was his goal. He didn't end up getting there. But he was going to have 26 SPACs, one for each letter of the alphabet.
So this is a guy. And what's his name? What's his first name?
Chamath Palihapitiya.
He's so good at math.
Chamath is the last name. His first name.
Yes. His parents named him Chamath because he's just that good at it.
Oh, that's a cool name. All right. And then so this guy wanted to do 26 SPACs and then didn't get to 26 SPACs, so that makes him a bad person.
By the time he got around to get like the 4th or 5th one, they were already in like massive drawdowns. So he's like, all right, maybe this isn't going to work the way I thought.
Jason Wang says he's a billionaire. Sounds like he did something right.
One of his.
I am not a billionaire.
Wait, I think Open Door was a Chamath SPAC. I'm 90% sure that was one of his. So
he made his money. You know how he made his money, guys?
Yeah, Facebook.
Okay. Nobody talks about that anymore. Like he's some private equity. He made a ton of money on Facebook. Good for him.
Yeah.
One of the first employees.
Now we
have to hear about him all the time for the rest of our lives.
So anyway, a lot of people, got left holding the bag.
What is people being so angry about SPACs have to do with this guy?
He was the poster child of bad actors in SPACing during the last cycle.
Why isn't he in jail?
He was a bad SPAC daddy.
And why isn't he in prison?
Well, because he didn't do anything illegal. He just brought some shitty companies to market, right? That's
got some exit liquidity.
Yeah, the retail was exit liquidity for him and all his friends, right? That
sounds like a pretty good idea. I don't see the problem here. What is the problem?
It depends which side of the coin you're on, doesn't it? Right?
Yeah, I'm still not seeing the problem here. You want to do a little state of the markets?
Yeah, let's state them.
State them.
Okay, somebody sees the problem.
All right, we got the Dow doing nothing once again. Happy August, everybody. Hope you guys are enjoying big nothing burger here in the market with the Dow up. Are you ready for this? 11 points to the upside. That's 45,000 for the Dow. S&P 500 futures also doing nothing this morning. Happy August, everybody. 64.27 for the S&P, which is doing nothing today. And the NASDAQ doing slightly more than nothing, but pretty much close to nothing. Nothing burger for the NASDAQ as well. Slightly down, 23,420. 30-year bond futures, what do you know? Also doing nothing this morning at 114.5. Crude oil up 1%, 62.5. Copper flat at 443. Gold up 0.75%, 33.80. Silver up 0.5%, 37.5. With the VIX still under 16, pricing in less than a 1% move per day in the S&P 500 based on the VIX. Over in Funny Money Land, we got Bitcoin up 1,000 points this morning, pushing 114,000. You got Ethereum up 3% today, 4,200. Over in Solana land, Solana 182, up 3% on the day. That brings the total crypto market cap, Mr. Spencer Israel, to 3.79 trillion. 3.79 trillion. And big event today at 2 o'clock. We're going to talk about Mackie is going to be presenting how we profit from consumer stocks, the most important stocks in the world.
That's right. This is all the places that we are all naturally interested in because we spend money there, right? Like we spend money at these places. It's not just retail, right? It's anything consumer. It's food. It's subscriptions. Anywhere you spend money. Right?
Uber, Netflix, YouTube, right. Spotify.
That's right. It's a lot of growth. These aren't just like fun companies and the companies that investors tend to gravitate towards because they know them, but like these are some of the best companies in the market that Jeff gets to cover by covering consumer.
I would say they're definitely the coolest because I can grasp. It's hard for me to like grasp like a SaaS company because I don't like unless I use it for work. But it's hard for me to grasp like a Palo Alto Networks because I've never even seen that in the wild anywhere, right? You know what I mean? Sure. But like I can grasp Target, I can grasp Spotify, right? Peloton. Like,
I love what Jeff is doing with his basketing. We just can't rely on the indexes for this stuff. There's nobody better to kind of basket these consumer stocks than Jeff. So I'm super interested.
If you're using the other day, it was so funny. We were talking about Jeff's top 30, or they're the names that Jeff thinks are the best 30, and then Jeff and I at the same time were like, that's being a little redundant there, right? Of course, they're the best, and that's what Mackie, right?
Yeah, no, Jeff's great. One hole says Mackie versus the red flags guy on cruises Royal Rumble. Let's go. One hole. I've pitched this idea to the guys before. I'm just going to pitch it again right here. Bull bear debates live.
Oh, they're not going to beat the crap out of each other?
Live on Stock Market TV, cage match style, chat votes for the winner. And you have a live tally, right, on the live stream.
We got to find something they disagree on.
The chat votes them up.
We got to find something they disagree on.
The issue is it's not they both like cruises.
They both like cruises.
That's not going to work.
So it's got to be JC versus Jeff then in the bull bear. That's what you want to do.
Dude, I'm not getting on one of those fucking boats with all those people from Times Square. I don't care how bougie the boat is.
I'm just talking about getting in for the cage match.
I just can't imagine like it's time for dinner. Like it's time for dinner and you're in this beautiful little town that you've never been in the world. And instead of having dinner in that town, you got to get back on the fucking boat. Oh.
And then even when you get back on the boat, you're sitting in the boat dining room having dinner. And all you could think about is what happened to Amy Bradley?
No.
Who is this person?
Fucking people. And JC, also what you may not realize is on a lot of these cruises for like the dinners and stuff, it's assigned seating, right? So you're eating with the same strangers every night. So I guess they're not strangers; they're friends. is what that is.
I
Anyway,
guess. I mean, that is really something. I mean,
They dance, they do karaoke, they do
throw
bingo.
up, can we
have
throw up
game
slide
night.
32? Throw up slide 32
moving
there
on
quick. Let's
here.
remind people what Carnival cruises are like. This is a recent image from the last couple of weeks. When I think cruises, this is what I think about.
Can we move on,
And this
please?
looks like my worst nightmare. Back
Yeah.
in the day, I used to do this show on TV. I think it was on CNBC. It was called I forget. And I was going through Times Square because they would record it at the NASDAQ, which nothing happens there. It's just like a small television studio. And I would have to walk through Times Square to do the television show. And this is what it looked like, except you have Superman and Nemo. And like they haven't showered in weeks, in addition to the shit show of that cruise. That's what that reminds me of.
Shout out Poop Cruises.
Shout out Poop Cruises.
Right.
Okay, ready? Let's get back to the task at hand here.
Yes, please.
I am being told that this is a market top. There are signs everywhere of a market top. That's what they're telling me. Throw up slide 4. Does this look toppy to you, Mr. Strazza?
I'm not seeing those signs, to be honest.
I don't know what signs. I see angry people. I see underexposure to the market. I see new all-time highs. None of those things are evidence of a top.
No, I'm with you, JC. I think things look pretty good. I see evidence of potential rotation, which I think would be constructive and healthy, and deserved at this point. Would it be so bad if, think about it, for the last month and a half, the Dow Jones, the Russell 2000, indexes that really represent the average stock have gone sideways. Go look at the charts. Straight sideways, consolidated.
Oh, I've looked at the charts, sir.
The S&P 500, NASDAQ 100, meanwhile, just grinding steadily higher day in, day out, up 3-4% over this time. Would it be so crazy to think for the next month and a half, the Dow could grind higher, break out of this beautiful consolidation? Do we have a Dow chart? Throw up the Dow Jones.
Do we have a Dow chart? Who are you talking to?
The S&P and the NASDAQ and the growthier index is kind of chop sideways, correct a little bit, maybe even give a little bit back.
Do we have a
Could you
Dow
see
chart?
it? Could you see it?
Throw up the new slide 2.
Imagine a world where JC's favorite, Dow Jones, industrial average.
It's not my favorite.
The greatest index.
It's not my favorite.
Imagine a world.
It's not my favorite. In a world. No, it's not my favorite. It's the best. It has nothing to do with my favorite.
Could the Dow outperform in a bull market environment? Yes or no? Go.
Of course.
Fuck yeah.
That would be
in a big way, just in 2016 and 17. You go back to the 80s, 90s, did all the time. A big outperformance just in 16 and 17. It was counter trend for the ratio. This is Dow versus S&P ratio. But has there ever been a better place?
Wow, look at this. Steve Strazza coming in hot with the Dow S&P ratio. Hello.
You know, every now and then I bust a good ratio chart out.
Not bad, Strazza, not bad.
When we're at some monster levels. I'm seeing this, JC, and I'm thinking, it wouldn't be too crazy. It wouldn't shock me if in the middle of this AI-fueled technological revolution, stock market boomtown, that all of a sudden financials and industrials and commodity stocks just start outperforming. Wouldn't surprise me one bit for that to be the case.
For the record, the Dow Jones Industrial Average is not my favorite index. It is just the most important one.
Look, I love that about you. What's your favorite?
No, my favorite index is probably the old what is it? The Shanghai? What do you call it? The Fanghai Composite. That's
Shanghai
my favorite
Comp.
index.
That's
a Steve Strazza special right there. The Fanghai Composite. That is my favorite index in the world. How about that?
Caleb thinks no rate cut in September. What say you?
Rate cuts?
No cut.
Do I look like a bank to you? Why would I give a fuck where Fed fund rates are?
Cut.
I'm not a bank.
Cut.
I'm
Guys,
not a bank. Why would I care where Fed funds are going?
Yeah, but you come on. You know, banks are important.
Do I look like a bank to you? Do I look like an old, depressing place?
You look like a guy who wants a bank with a physical location. You look like the kind of guy who wants to
Let me tell you something. I walk into the bank, I'm high-fiving people. I'm like the mayor at the bank. Are you kidding me? I am so VIP at the bank.
You love it. You love walking in. You go like once a month. They all know you by name.
They do.
Right?
Yeah.
Yeah.
Actually,
hang out. You go into somebody's office.
Cause I needed a check the other day to buy a house. So I walked in there. So we started talking and then they see the Coinbase transfer and they're like, what is Coinbase? And then I was like, oh, you know, the monkey and then the thing. And we start going down this rabbit hole. They think I'm crazy at this bank.
Good. Good. They should know. It's
By the way,
important.
across the street from the bank, I discovered a taco place, and it is edible.
So okay, so you're trying the tacos in Pennsylvania?
I've been trying the tacos. I'm very open-minded. I'm disappointed every time. I walked in there. There's like no shot in hell this place makes good tacos.
Yeah.
Not bad. Not
Okay.
bad. Yeah, I mean, you know, for here, it's as good as it's got. It's the best tacos I've had on the East Coast since I moved back in 2019.
If JC doesn't have a good taco and too much time goes by, he gets a little stir crazy.
True.
Gets a little stir crazy.
He's right.
He starts telling Morgan he's got to take a trip to Sonoma and get some tacos, right? So
And I
I
remember
hope you
how
find-
heartbroken I was when we showed up and that truck wasn't there. I almost started crying.
Forget it.
I swear to God, I almost started crying.
That
All
was
right. Can we go to? Can we? I got a chart for you guys. You throw slide 6 here. As we know, the speculators, these are asset managers, hedge funds, have the largest net short position in the Russell 2000 ever. Largest short position in Russell 2000 ever. If you want to zoom in there, this comes from the American Association of Individual Investors, the AAII, which that data is going to come out today at midnight. Are you as excited as me to see if there are more bears than bulls again for the third consecutive week? But nevertheless, this chart comes from last week where they polled their individual investors. What types of stocks are you favoring right now? Look at small caps down below. Only 3% of respondents are favoring small cap stocks.
wow, and value just still so hated. Really fascinating to see dividend stocks up here. Could this be like a bond proxy trade?
I think it could be. I think it's this. Go to the next slide. I think
Getting
it's
some
this.
love out here.
I think this is what it is. You got Russell 2000 futures, largest net short positions by speculators ever. Super high net long positions in the queues. I think that unwind is here to go. Throw up the ratio. There you go. Throw up the ratio. There it is.
You think it's go time? You think it's about to get started?
Man, I mean, I think that the setup is there. Everybody hates small caps. Not only do they hate them, they've never been more short. The dumb money has never been more short small caps. You're seeing it from individual investors as well. You're not just seeing it from pros. And so the ratio there, man, looking juicy, momentum, positive divergence there. I don't know. I'm just saying.
I like this. And this comes with the implications of some of these long-term ratios that have been 10, 15-year trends. The implications of them reversing, it can't happen in a vacuum. Other things will happen. So if JC's right and this ratio is about to dig in and reverse here, guess what else is going to happen? Go back to the Dow S&P. That's going to bottom at this historic support level. Guess what else is going to start to turn? All the value versus growth ratios, they're going to start moving up and to the right. The small cap versus large cap ratios up and to the right. The international versus US ratios will be up and to the right. All of these things will start to go around the same time. In my opinion, I'd be very surprised if they didn't, because it's really a matter of anything that's not growth concentration working more than the growth concentration assets.
Mark Watson says, Howard Lindzen points out all the current crazy behavior that often happens at market tops, rampant speculation. I'm going to have a little talk with Lindzen. I don't know, or why don't we just have him on the show? Because I don't clearly see rampant speculation. I see excessive short interest and an unprecedented pessimism despite the new all-time highs in the stock market. So I'm not sure where Howard is getting his data, but it's fake news.
Let's help Howie out. Let's have him on.
Howie out. I don't know where he's getting his sentiment data, but clearly it's a bad source.
Yeah.
Come on, Howie. Come on in. Talk to us. You know, we'll smooth this out and show that we'll walk through the data. We are data driven here. Data driven.
Howie got big bear last cycle. I don't know if he's ever really fully come back. He went full bear, big bear, full bear. And I don't know if he's made like the full 180 back to bull. But Howie's traditionally a good bull.
But Howard, it's hard for Howard to actually express bearishness in the open market because he has such long exposure in his private equity funds. He's got long exposure in his equities accounts. He hodls Qs.
I feel, I got to say, kudos to him, because if I was Howard, I would probably just buy a ton of bonds.
Howard did call me a couple of years ago. He's like, JC, I bought bonds. And I'm like, Howard Lindzen is buying bonds? What kind of world are we living in?
Yeah, I'd be heavy in the bonds and just probably care a lot less about all these crazy growth stocks.
those are a few of the things that are on my mind. I'm just, if you want to go back to the SPAC, throw up slide 4 there. This is what these guys were talking about, how we had an explosion in the SPACs. Honestly, I really do love how angry people get at the SPAC. So shout out to angry people.
Shout out to anger. Shout out to
anger. If it wasn't for all these angry people, we wouldn't be making as much money as we've been making. You know that, right? Like
facts only.
Like facts only. Like
true.
Steve Strazza putting up a banner year. I'm doing pretty well myself, I must say. None of that would be possible if it wasn't for all the angries.
And stupid people too. Just want to be grateful for inexperienced novice traders, investors who just shouldn't be here. Because we need them.
No, stupid people. It's a good call. Shout out to the stupid people. Because it's not about being smarter than everybody else. It's not about being like the smartest person. It has nothing to do with intelligence. The only thing you have to do in the market is be slightly less stupid than all the others. That's really what it is.
Really know. You have to just know how stupid you are as a market participant, and you'll do okay. Like you just walk in the door and accept that you're screwed. You'll do all right.
Yeah. No doubt. Yeah.
Okay.
Yeah. Slightly less stupid.
I like that.
That's
all relative. It's all relative. It's a cap-weighted world, and it's all relative.
It's a market cap-weighted world. That's exactly right. Here's an interesting one on market breadth. This one coming from our friends over at Duality Research. Actually, can we consider them friends? They're not our friends yet, right?
Can we get them on? I want to know.
I want to be their friends.
Charts.
No, that's a good point. They're not our friends, and I'm not happy about that. I would like to be their friends. I don't know who they are.
Can we meet them? This came up at dinner, JC, in New York City.
Yeah, we're not friends. But we should be friends because this is a dope chart. And game recognized game. This is a dope chart. The world needs more scatter plots. This is an excellent chart here. Excellent chart. This one today is now Wednesday. So this goes back 2 straight days. This was yesterday's chart. This goes back 2 straight days. Where you're looking at only 2 days since 1996. There were only 2 days with better breadth and a bigger loss. So in other words, despite any selling pressure that you saw in the stock market, breadth was very, very strong. Only twice since 1996 have you had better breadth with a bigger decline. Any thoughts on this?
It's a really cool chart. It looks like an ocean. It's very nautical. I like the colors. I really dig this.
What do you think? Not bad. Hell of a chart, Duality Research. I want to give a big shout out to the folks over at Duality Research. We should be friends. I don't know why we're not. We should be friends.
Yep. Look, it's read my note from last night. Drop my note in. This is just the situation. If you consider the S&P 500 the market, you're going to be duped a lot because 5 to 10 stocks are going to be moving in one direction, and the other 490 aren't going to matter. And you're going to think, oh, the market was bad today. We got on our analyst call yesterday before anybody could say anything. Grant said, more stocks are up than down today. You wouldn't have known it if you looked at the index level, right? But we're aware of these things. And really on a day like yesterday, if you want to plan for more days like yesterday in the future, and some of these ratios that JC and I have been talking about this morning, reversing and starting to move in a different direction, it's really about the stocks that you own. If you're not going to do well on a day where the S&P 500 gets hit, go through your account. Are all of your biggest holdings the same as the S&P 500s? Maybe you want to make your portfolio look a little bit more like the Dow Jones. Add some more dividend stocks. Add some more investments. Add some more financials.
Hey, make your portfolio look a little more like the Dow Jones. Wow.
Words he never thought he would say. But what I'm saying is, you can be a growth investor, but still own some dividend stocks and some defensives and buy a little healthcare and some banks. Like
buy a little healthcare.
You don't have to be like, I only buy tech stocks because that's what's worked for 15 years and it's going to work forever. Because you're going to be wrong
those people. There's a lot of those people. I only trade tech stocks, JC. I'm not going to buy healthcare. Yeah.
Well, I only own tech because everything is tech. So as everything is tech, and I own everything.
Good one.
Hey, okay, we are running behind here. Can I bring on Kenny? Let's go.
Let's do it.
We're running way over.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
My friends.
Kenny Glick, hello, sir.
I might be caught in the matrix. Can you hear me?
Where in the world? Where are you?
I'm in an undisclosed locale.
Of course.
All right.
Of course.
Let's leave it there. What's
Okay.
shaking?
What's on the move this morning? Talk to me.
Well, talk about yesterday. We finally got the sell-off, and I heard you mention Howard and talking about the signs of a market top. Yeah, we've seen those signs now for 8 or 9 years. There's no such thing as a top, and there is no spoon. All right, friends? It's a temporary top, if you're going to call it something, because the market always goes up to new highs.
I believe they call them local highs.
Oh, local highs. All right, cool. But seriously, the what I learned in, when I had my largest short position on back in 1999, and my mentor is like, shaking his head and watching me short the market as it was ripping up every day. And then he came over to me and said, listen, you're going to be right in about a couple of weeks. Now, when he told me the signs, it was the dash for trash. He was talking about like bulletin board stocks were moving. He was seeing the signs of rampant speculation, but he also pointed out you need some VIX, and that's what we got yesterday. So finally, UVXY woke up, and I took a long position in UVXY for the first time since April, and that was the trigger. And then we finally got some follow through the downside, and every level that we pulled back to on the Qs was either a 5, 10, 15, or a 20-day VWAP. So everything was still completely just what do they call it? A controlled sell-off. There was some selling, but it's still really not that much. But we did run out of steam. The Carvana and the Palantir, again, shout out to my friends who sold the stock over 180 and had the courage to go short. Nice job.
Oh, I didn't get short though. We took it all off the table, like in the high 180s, believe it or not. Great sale, but no, I did not get short.
Yeah, I did it live with Joel and Dennis that morning. I was talking about dumping Palantir for the first time, and now with those leveraged short stocks, the PLTZ, I think it is. I don't even know anymore. There's like 9 varieties of every stock. But I'm going right back to looking at the Qs. If we break the overnight lows, we have some selling to be done. We're again, if you just go way back 2 weeks ago, the Qs were at 551.50 on that last sell-off on the jobs report. But that was when tech was running out of steam. You had the Apple reversal that morning. So again, I think we could go test those lows. And again, those lows are still over the old all-time highs. So again, if we do get that pullback, it's just going to be another buying opportunity, as it always is.
What are you trading outside of the big tech and the indexes? You got anything in other sectors that's got your
I'm looking
attention?
at Target. Target and TJX today. They both Target in particular getting slammed, so I'm going to be watching that for a little bit of buy.
Isn't that what Target does?
And what else I have on the list? I got to watch the Palantir today. Again, if they really smash it down to under 150. I'm going to look to scoop some up possibly for that day trade. But as far as the market, I'm just concerned. If UVXY stays green today, and my God, if it gets over 14, this market's going to start getting hammered, and it's warranted. Again, this now seasonality has kicked in. We were a day early. We thought it'd be on Monday. It was on Tuesday. So we're just going to watch to see if there's any follow through today.
Dow Jones Industrial Average up yesterday, up once again this morning.
Yeah. So,
also closed at an all-time high last week.
Yeah, the idea of everything giving way simultaneously, it doesn't happen anymore. But
it doesn't happen in bull markets.
Right. The perpetual bull market that we're in.
That's right.
Yeah.
Sector rotation, the lifeblood of a bull market.
Yeah. What else I'm looking at is Hertz. Hertz has some news today. I like a short squeeze. HTZ. If you guys are watching that, it's got some.
Yeah,
news on
that still has a high short interest. Hertz.
And you know what? For the little guys, what woke up yesterday? And by the way, listen, while the market was tanking, we're on this unprecedented run, the faux show bro VWAP reversal trade. I know it sounds incredible, but now we're at 1,079 in a row. We had VIK yesterday long while the whole market was tanking. VIK, nobody trades this stock. This is the Viking Cruise Lines. No casinos, no kids. One of the greatest IPOs. Nobody talks about it.
No casinos?
No casinos, no kids. That's their slogan.
Is it?
Yeah.
You would think there'd be more casinos with
we're
the
all
no
about
kids.
the educated and sophisticated traveler.
No casinos.
That's why I don't go. So
I don't mind. I'm not a casino guy, but it's just surprising. Sounds like they're leaving money on the table. No.
Yeah.
I would just add. I was talking about this with Jeff Mackey yesterday. They have like an 80-day cruise to Antarctica if you want to go. It's like 75. It's like 75 grand.
This sounds like my worst nightmare. Imagine being stuck on a boat with these people for 80 days.
We're looking at the 12-day because what you do is you fly down to Argentina and then you get on the boat there and they cruise down to Antarctica and then you take a kayak and you go basically kayaking around Antarctica with the penguins. That's something I might want to do. It's something it's better than sit on an island. All the islands look the same to me now. So I'd rather go on a kayak
That's true.
7.
All right, Kenny Glick doing his
Well,
thing and
listen,
hit the
I'll
bid.
see you guys tomorrow. I'll be in the room, and we'll probably be
Kenny
schmoozing.
Glick from an undisclosed location.
Undisclosed location.
All right. Thanks, Kenny.
I'll see you guys.
All right.
And he's gone.
Kenny Glick, and he's out.
All right. We got James Brodie on. JC, you know James, right? We've had him on
I
the show
know him
before.
well. We
Yeah.
have we've drank beers in Singapore,
Oh.
London, New York City. You know, he's somebody I like to drink with and talk charts with. Cities all over the world.
Alfonso requested we ask where James is because Fonz is in Birmingham or somewhere. I don't even know where he is, but
Oh yeah, they should hook up for sure.
Let's find out.
Let's do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Brodie.
JC, how are you?
I'm doing great. Great to see you.
Good to see you guys. I'm in London, West Kensington.
Okay.
Is Fonz out in the UK right now?
Yeah, but I don't know where Fonz. Where are you? Scotland? Where are you right now?
Fonz, we got to get you.
You're
He's
down
in
this way.
Birmingham.
Oh, he's in Birmingham. Okay. I don't know where that is.
It's middle of the country. It's near enough.
Okay.
Fonz, let me know if you're heading into London. I'll hook you up with James.
Do.
If James Brodie, this is Alfonso's like a young Venezuelan James Brodie, right? If you can imagine that, right? So think about it like that. James, you brought over some charts. I want to get to those things. We're talking gold, we're talking forex markets. Why don't you set the stage? Some of the folks might not be as familiar with you as some of the rest of us. Why don't you fill them into your current role, what you were doing prior to that, so they can kind of see the lens in which you see markets through?
Certainly. Well, I was trading from the early 1990s in London originally, interest rate derivatives mainly in forward FX. Then 2000, I was in New York for a year and a half, then Tokyo for a year and a half, then 14 years in Singapore. Trading, now I'm doing training at Onyx Capital Group. I'm training the new traders coming in, also working with our clients as well. Also doing daily run-throughs and a weekly podcast around the market. So my lens is much more interest rate, FX, macro focused. Of course, I was a CMT I was looking at technical analysis actually, my first hour in the markets. I was given derivative trading limits. I didn't know what a derivative was. And my manager said, you better read this book. And he gave me Murphy's Introduction to Technical Analysis. So I know you from the CMT symposiums all around the world.
That's right. James, so I didn't realize you were in Singapore for that long. How long did you say you were in Hong Kong?
Singapore for 14 years. I did brief stints, Sydney and Hong Kong for 3 months each. But yeah, New York, Tokyo, and Singapore mainly.
All right. What is the best city in the world to live in?
To live in? Depends. Definitely.
Which will be a different question. What's the best city in the world to visit, right? Two different questions. Go.
I'd say Tokyo to live if you're young.
Tokyo to live?
Oh yeah, absolutely. Tokyo is fantastic. The skiing.
I would have said to visit. And what about like non-Japanese folks? They don't like to do business with the non-Japanese, right?
I don't know. It's good. It's
Japan's
opening up as well.
Okay.
Japan's the most. In Japan, I went from New York to Japan, and believe me, the nightlife was crazier in Tokyo.
Oh yeah, a few late nights in Repugny.
A few, but I've had kids since. So if you got kids, then Singapore's a place to live.
Dude, Repugny's the spot. I had some good times there. I got taken to a salsa club in Repugny, believe it or not. Place was bananas.
Next time we have a beer.
Yeah, and then so best place to live, Japan, best city to visit, and then you're gonna get the hell out of there.
Hong Kong's quieting down. I mean, Sydney, Vancouver are great.
Vancouver is awesome.
Yeah.
All right. I love this conversation.
London.
Who's got the best food in the world?
Japan, I'd say.
Yeah, I was gonna say hard to beat Japan. Yeah. All right. Japan has more Michelin star restaurants than New York and Paris combined.
Yeah.
That's just Tokyo alone, not even Osaka and Kyoto.
Yeah, I know you like to ski. In Hokkaido, the North Island has 4 times more snow than anywhere in North America.
Dude, January in Hokkaido. I was going to go, and then I started having kids, and now I've been stuck here. Right? As you can relate. All right, James, let's talk markets. You brought over some currency charts, so I kind of want to dive in there. You know, so for me as an intermarket guy, as a John Murphy disciple, you mentioned Murphy before. You know, for me, it starts with the intermarket complex. You brought over a long-term chart of the dollar index going back a couple of decades here. There's slide 10. Looks like a big range. Talk to me about what you're seeing.
Yeah, the key point here, I mean, the markets have been pretty quiet. It's typical summer doldrums. They're beginning to pick up this week. Have you seen with the cryptos selling off, and we've seen the Palantir move yesterday. But the bond markets and also the dollar, you know, they've had a big move, and it's been going sideways now for a few weeks. But we're coming to the crux. We've got Powell speaking at Jackson Hole on Friday. And what's interesting, we have the next Fed meeting, 3 meetings before Christmas. The next one is the 17th of September. But what I find interesting, I mean, it's rare that I've known the market so diverse in opinions. We have JP Morgan calling for 4 cuts by year end, Goldman's going for 3, and the Fed funds futures, the OIS overnight index swap, the market is basically pricing 54 basis points of cuts.
Okay.
But you know, CPI's above target, PPI, core PPI's at 3.7, unemployment's at 4.2. So many people say, you know, do they really need to cut? And this is the chance now. The Fed said they were sort of pausing while they see how the tariffs work into the system. But now there's a chance for Powell to give a bit more insight on how the Fed see it. Of course, Trump's calling for cuts down to crazy levels. And even Treasury Secretary Bessent's calling for 50 points at the next meeting. But you know, the market's stalled here. And you can see the dollar as a long-term trend. And, you know, we're getting to the point we have to, decisions will get made, and what will the market do when we're getting to that time of year where markets volatility picks up.
You think the dollar's going to find some support here at the lower end of this rising channel?
Again, I think it comes down to the data and the Fed. Are the Fed going to follow through? It's found support over the last few weeks, but if we look at the dollar yen chart.
Yeah, throw that up.
Yeah, you can see here, this is the interest rate differential. So dollar yen is the orange line, and the yellow line is the spread between the 2-year dollar IRS and the 2-year.
Hold on, I don't see a yellow line. I see a white line and an orange.
Orange. I've got bad eyes. Showing my
And then
age.
there's the white line. So the white line represents what?
The interest rate differential between the 2-year dollar swap and the 2-year yen swap. And the orange line is dollar yen, and that's kind of suggesting it should go lower, of course.
I was going to say, quite the divergence there, huh?
Absolutely. But of course, lots, you know, we have yields going higher. So in Japan, what is it? The 10-year yields now the highest since 2008. In the UK, yields are going up, but they're the highest they've been as well. The 30-year, we've got, looks like we're moving towards a Liz Truss moment here. We've got all sorts of debt issues and a chancellor of the exchequer that's struggling to manage the government's finances is a polite way of putting it. So it'll be interesting to see how the curve reacts as well, because where do you put money, especially if you see equities do start to have a pullback here? You know, the short end of the bond market's got a lot priced in. The long end, people are avoiding long ends at the moment with the curve steepening. So I think we have the gold chart. To me, it looks like gold's going to look for a breakout. There we go. It's a nice. You can do it 2 ways. There's a sort of continuation pattern here, and again, quite often the hardest thing in trading is to sit on your hands and do nothing and wait for the breakout. But there's also a triple top around closing levels of 3,430, but it will be pretty clear if and when it breaks out. And 2 other things to support the buying here. We know central banks are buying gold aggressively, and we also know.
How do we know that?
We can see the data. We can see central banks publish what they own. And we can see China particularly have been buying it in recent months, but we've seen other central banks buying aggressively. But we also see now actually China. So typically people for decades have been buying property in China, but the last 2 years, of course, property's been going down. We're seeing more retail trading coming into the gold. So to me, this looks like a continuation pattern. I may be wrong, but you can wait for the charts to break out and follow the breakout.
You know, the way I learned it, James, is that, you know, consolidations tend to resolve in the direction of the underlying trend. And when I see gold, I see a very strong uptrend, obviously, and, you know, what seems to be like a healthy consolidation. So, you know, if this does not resolve higher, you know, I think about the negative implications for something like that. So I'm looking at it both ways. Just because it's a consolidation with an underlying uptrend doesn't mean it's going to break out. In fact, if it doesn't break out and it resolves lower, that's a big signal to me.
Absolutely. But one thing to take into account there is the central banks holding long positions. They won't stop out. In fact, they would add to longs as it goes down.
Got it. So you've got an underlying bid in there, huh?
Absolutely. But you're absolutely right. At the end of the day, the only factor, the only arbiter of your P&L is actually the price action.
Which is nice, right? There's no debates, right? The market is the final arbiter.
Absolutely. Everyone has their narrative, and you can be long, you can be short, but at the end of the day, your P&L is struck against the closing price.
No, 100%. Some people, like in social media, they're like, "Oh, JC, you're wrong." It's like, all right, I guess we'll see what happens.
Yeah, exactly.
I guess we'll see. Maybe I'm wrong. Maybe I'm right. I don't know. It doesn't really matter. It's just one trade. We'll see what happens,
Yeah, I've been wrong many times.
That's right. That's right. I guarantee you I will be wrong again, in fact.
Yeah.
I don't make a lot of guarantees, but that one for certain.
Yeah, what makes me wrong is my view, and what makes the losses bigger is my stubbornness. So it comes down to
I like that, James. I like that. I'm going to steal that one. That's a good one. I like that. All right, you brought over a chart of the 2-year yield. I am one to look at the 2-year yield. It's kind of like a leading indicator. I really appreciate the 2-year yield for those reasons. Not a lot of people talk about the twos. Curious to see what interests you about the twos.
To me, this is the easy way of looking at the short end of the market, what the Fed's going to do and what the market's pricing. You can look at the OIS, but this gives you a bit of a greater picture.
All right, so that's boring. So you like it for the same reasons I do.
Yeah, the other point is the 2s and the 10s are the most liquid parts of the bond curve as well. So you know where the stops are going to be, and you know where the buying and selling interest is going to come in.
Oh, that's interesting. I hadn't thought of it that way. So you're saying that the volume in the 2s and the 10s is much more than the 30s, huh?
Yep.
Huh. You know what? I hadn't really looked at that. I would have assumed that the 30s had much higher volume. You're saying that's not the case at all.
Yep, absolutely. Much more in the short end of the curve.
Wow. See, there you go. You learn something new every day. See, I wouldn't have thought that, because in the ETF world, where I live in more than the futures market, the TLTs are really the liquid ones,
Yep.
But it doesn't translate like that into the futures. All right, James Brodie, coming in hot, adding alpha.
Yeah, the 2 parts of it what I like is looking at the 2s, 10s, of course. The curve, that's bond market. People love looking at that. And the market's steepening. Also, people look at the 3-month against the 30-year. That's steepening, but for 2 reasons. One is the market's pricing in cuts at the front. And the other is the market doesn't want to hold long-end debt because of the fiscal situations around the world. But if you're looking at this, you can see it's converging price action. And, we're coming up to what's the Fed going to do? Are they going to cut 50 by year end? Are they going to go 100? And a lot of it, I guess, depends on the data. It makes us more data dependent, and listening to, of course, Powell at Jackson Hole. And Jackson Hole's typically been a market moving event in the past. Doesn't mean it's going to happen this time, but Powell should give some more clarity, and whether he's going to stand up to the pressure from the administration. And what's interesting with the administration, when Trump came in, with Doge and Elon Musk, they were looking at cutting costs, but now they've turned 360 and they're now looking to pump the economy stronger. There's more stimulus come in and they want cuts. So, it comes down to the man that makes the decision is actually Powell. So Friday is going to be important, I think.
So then this speech in Wyoming is on Friday. Do I have that right?
Yes.
I'm more of like a Wyoming visitor when all these economists are not there.
I can imagine.
Imagine showing up at beautiful Jackson Hole, Wyoming. I mean, just an amazing, amazing place. But then you got all these economists there too. Talk about a buzzkill, man. That's a bummer. All right, James, let me ask you this. So, you came in hot from an intermarket perspective, with Forex charts, with fixed income charts, all kinds of spreads. I appreciate your intermarket look here. Now let's drill down to equities. How does all of that impact, the market? We're seeing sector rotation across the board, pullbacks in technology, and then financials and industrials take over leadership. Then technology comes back, right? So like that rotation is the lifeblood of a bull market. That's how I learned it. That's how I've seen it. I've studied every bull market over the last 100 years. And one thing you'll find is that sector rotation is in there in all of them. And this one seems no different to me. I'm looking at the equally weighted S&P 500 pushing up against new all-time highs. I'm looking at the Dow Jones Industrial Average closing at new all-time highs on Friday for the first time this year. So is it distribution or is it just rotation?
I look at it, I don't know, I look at this, I look at the bigger picture this way. I see it slightly differently. I look at the valuations. The PE ratios are close to 2000 level highs. Price to book ratios at 5.5, breaking the highs. You look at the valuations of some of the tech, Palantir amongst others. To me, it just looks expensive. And I wonder, you look at what changes in the market. One thing that doesn't change is human psychology. But you see more and more technology coming in. We're seeing more and more AI. We're seeing record amounts of leverage coming in. So I wonder if, the market keeps going up until the price turns. We're starting to see that. At some point, you get a pullback and you get some forced unwinding. And it looks like the Palantir move yesterday looked particularly weak because it broke down through a gap. I think the gap comes in about 160, I think.
Yeah.
But that looked particularly poor. And again, you typically want to be long the equity market, of course you do, but it looks like there needs to be some air taken out of the balloon.
I mean, this thing had one heck of a move. So let's keep that in mind. This has been a monster market leader. I'm no longer in it. Wish I was short. But let's just remind everybody that this thing went up from the 23 lows. I mean, I can't even count that high. This was a $6 stock, and it went to close to 200. That is one of the most historic moves in the history of the United States equities market. I mean, talk about an increase in market capitalization that we have rarely seen in history. The 200-day moving average for those who partake is basically half the current price where it was. So, I mean, correction clearly due. Doesn't mean the market needs to fall apart. If you get that rotation that we're seeing into healthcare and in some of the areas like the consumer discretionary on an equally weighted basis, just closing new all-time highs, the rotation's keeping the market up.
But what about rotation into other markets? So what's interesting, I highlighted in the trader chat this morning, is China. We had woeful data out of China at the beginning of the week, but if you look at the Shanghai Composite, it's making new cycle highs, 10-year highs. If you look at their bond market, their yields are going lower. Now the 5-year forward yield is turned, and that's clearly going higher. So the market's looking at, has the stimulus in China, is it finally taking effect? So that the market's strong, even on the back of pretty woeful data. Unemployment surprising to the upside, retail sales weaker, fixed investment weaker, industrial production weaker than expected. But the market's going up. So are we seeing rotation into other markets as well?
It's a great call there on the Shanghai Composite. Making new decade highs, historically breaking out to new decade highs, not historically evidence of a top, but perhaps the initiation of a new trend. When you talk about like rotation into other areas outside the United States, I mean, that's part of the sector rotation, in my view, because a lot of these other countries, maybe China's a bad example. China's like its own animal. But a lot of these other countries don't have massive tech exposure. They have a lot more industrials, like areas like Germany and France. They got a lot of healthcare. They've got a lot of basic materials and natural resources, like maybe Latin America or Canada. Very, very different than America. I mean, countries that have massive tech exposure outside America, maybe Israel, Taiwan, like you got a couple, but it's really America dominant. So if you're getting rotation out of tech into other areas, there should be a lot of countries that are outperforming the United States. And what's wrong with that?
Yeah, it's interesting if you go back to sort of February, March, earlier in the year, when you had the huge stimulus package announced out of Germany, 500 billion in response to defense against Russia. All of a sudden, you saw a great surge of money going into defense stocks in Germany, Rheinmetall amongst others. So again, more rotation, different markets.
Yep.
Interestingly, with China as well, you've got record leverage there as well. That always scares me. Having lived in, one interesting point about living around the world, you see how different societies invest. And it's far, far more aggressive investing in China compared to the US. I'd say it's outright gambling. They're trading everything. I remember this was back in 2015. It's going back a bit, but cotton and iron ore, the price doubled but volume went up 30-fold. And what you had on just one exchange alone, on Dalian, the amount of cotton trading each day was enough to make a pair of jeans for everybody on the planet. And you had just everyone in China's trading it. So it's far more aggressive. And you see the Shanghai Composite, we've had huge bubbles and crashes. Since 2000, we've had two huge pump and dumps.
When you talk about here, I want to throw up slide 2 here. Throw that up so everybody can see what he's talking about here. This is the Shanghai Composite making new decade highs. What a move. Look at this. So, James, when you talk about the speculation going on in Asia and the behavior of people throughout your travels, throughout your career, the Europeans are more conservative than the Americans, and the Asians tend to be more aggressive than the Americans, and the Americans somewhere in the middle. Is that accurate, or do you want to add to that?
That's very accurate. I'd say Europeans are far more conservative. I mean, not just more, far more. And Asians are far more aggressive. Or I'd say Chinese in particular. And of course, it's huge. The amount of people trading.
Why do you think that is, James?
Why? I think, I don't know, it's the way it is. I mean, if you look at even Macau.
Is it just a cultural thing?
If you look at Macau makes more money each day than Vegas makes each week.
Wow.
Which is part of the mentality, I guess. It's the mentality of the people.
That's crazy. Say that again, James.
So Macau makes more revenue each day than Vegas takes in a week.
Wow. That's insane. That's a great stat. Wow.
I don't been to Macau. It's a great place, but it's very small.
And then, so it's just a cultural thing. The Europeans much more conservative, the Asians much more aggressive, and Americans somewhere in the middle.
Absolutely. And in America, I guess you have your 401k plans that you actively manage. So we don't get that in the UK, in Europe. So that's why. But yeah, absolutely. Big difference between cultures, Europe, America, and Asia, especially China. But if you look at the interesting one really is India, because the growth of the economy and the amount of people coming into wealth, moving into the middle class each day, you're seeing a huge surge in investing and trading there. So you've seen huge moves in the Nifty. That's had a huge trend, which is stalling.
Yeah. The ratio between Chinese equities and Indian equities has really started to turn, huh? I mean, India dominated that for so long.
Yep.
Love it. James, where can the folks find you? Tell them where to find you.
I'm on LinkedIn and at Onyx Capital Group. So I also run a daily update just on the global macro markets. That's on Onyx Institute on LinkedIn. So find me on there, on Twitter as well. So James Brodie. But do get
Love it, Mr. Brodie. I'm going to hook you up with Fonz, and I know Sam's going to spend some time in Europe. He's going to spend about 90 days living in Athens. He's going to go back and forth over to London, so I'll hook you guys up as well. So we got some of the crew out your way.
Definitely, that'd be brilliant.
Treat them well, James. Treat them like if you treated me.
Probably Dubai and New York. I'll be at the next conferences. I'll see you then. But yeah, definitely get them to get in touch, and I'll show them some of London.
Amazing. The international man of mystery, Mr. James Brodie, ladies and gentlemen. Give it up. Thank you, James.
Thanks for having me on.
James Brodie. He's the man. He's the man. I remember partying at the Bloomberg and in Singapore with him. Went right downstairs. We showed up at this bar. Jamie Coots was there as well. There was a few folks that are friends of the show that were there for that happy hour. Man, we just showed up at the bar and they had just buckets of beer waiting for us, all kinds of food. Nice. Fantastic.
I did not know that about Macau. That's going to be.
I did not know that about Macau either.
Yeah, that's crazy. But we know that Vegas is struggling, so it makes a little bit of sense.
Vegas struggling?
Oh yeah.
Is it? Why?
If they're the double-digit year-over-year declines in tourism revenue, gaming revenue,
really?
The whole thing. Oh yeah, no one goes. Why would you go to Vegas to gamble? I can gamble right now, right?
I go to Vegas all the time. I shouldn't say I go to Vegas all
the time. No, you don't.
I used to go to Vegas I used to go to Vegas all the time before I had kids. I'm going to Vegas in a couple of months. By the way, save the date, everybody. Save the date. October the 21st. October the 21st. We're throwing a birthday party for Joe Fahmy. Joe Fahmy's birthday party October the 21st, hosted by myself and one Josh Brown. Josh and I are both speaking at the Stansberry Conference in October, so we're both going to be there. And it happens to be Joe Fahmy's birthday, who lives in Las Vegas.
Nice.
So if you want to hang out with technical analysts and rock stars, like actual rock stars that play musical instruments, Vegas is great. Brian says Vegas sucks right now. I don't think so.
It's just
I'll
not
be the judge of that.
It's just not what it was. I don't think young people of today are gonna be going to Vegas the way that people of past.
Yeah, but that's the young people's problem. That's not Vegas's fault.
No, it's
No,
Vegas' problem.
that is Vegas's problem, though.
It's going to be
already
Vegas'
reflected
problem.
in the stock charts.
Listen, I will go in October, and I will be the judge of what's happening in Vegas. As somebody who has
I've
been
always
to
said
Vegas plenty.
Vegas is great for 2 nights, no more, no less.
Yeah.
2 nights is
gonna
all you need.
Spencer Israel has been. You're having some weeks, Spencer. You are spot on.
You just need
that's
2.
accurate.
Yeah.
That's
If
accurate. I'm
you're
going to
there
do
for 3, that's a
nights.
problem. 3 is a problem.
I'm doing
3 is-
3 when I go. I'm doing 3.
Yeah, it's one too many.
And
You're
now
a big boy.
All right. Anyway,
when I
market's
first met my
open.
wife, I spent a week in Vegas because I went to the SALT conference with Fahmy. Speaking of which, we went to the SALT conference. We were there for 3 or 4 days. Already
go
too
for that.
long. We were already there for too long. And this was 2014. We were already there for too long. And so Morgan and I had just started dating. And then so as I'm leaving, literally, I was flying out that night. I'm with Jeff Hirsch, as a matter of fact, editor of the Stock Traders Almanac. We're at the club. We're dancing. I'm leaving in a couple hours, and I get a phone call from one of my college roommates. Hey, are you in Vegas? I'm like, yes, I am. He's like, I just landed. I'm like, oh, well, I'm leaving in a couple hours. He's like, no, you're not. I'm like, yeah, I'm not, huh? He goes, just crack. I'm like, I don't have a hotel room. He's like, don't worry about it. I got a 3-bedroom suite. You get your own room. I'm like, fuck. I'm like, all right, I guess I'm staying in Vegas for another 3-4 days. So needless to say, he met his future wife that weekend, and I showed up to a date with my future wife, hungover as hell. I had been in Vegas for a week. I looked like I got hit by a bus. She still tells me to this day just how bad I looked, and the fact that I was still able to recover and marry the girl. Not bad.
She almost broke up with you because of that.
We weren't even together yet.
So what's the deal with this birthday party? Anybody can go? What, like, where are you guys
invited?
Yeah, like, why are you
Strangers,
announcing this here?
Save the dates if you are in Vegas on October 21st, or you'd like to fly to Vegas on October 21st and join us. Yes, you are welcome. You come hang out with us.
Okay.
Josh Brown,
I don't know.
Joe Fahmy, bunch of rock stars.
Is it
No better place to be in the world on October the 21st.
Will it be safe?
Safe?
Yeah.
Dude, have you been to Vegas? You know how many cameras and security guards are there?
We're just inviting people from the internet.
Yeah, but we're like technical analysts and like traders. Like they're not like,
You know how I worry about these
we're
things.
not like politicians or like, you know.
I don't
So
know.
I don't think everybody's
I
going
can't
to
go.
a serial killer.
The Yankees have a playoff game at night. I can't go. So sorry.
Jesus.
Okay, let's get out of here. Markets are open. As I mentioned, busy day on the channel. 2:00 Eastern time today. Jeff Mackey going live, actually with JC Parets. The link is in the chat. It's pinned to the top. I'll throw the QR code up on the screen one more time. 2:00 Eastern. The Mackey 30 index. Jeff's plan for Q4 from the consumer standpoint. They're all going to come out this week and next and talking about their plans for the holiday shopping season. They all had to pull forward all this inventory because of the tariffs, and that's why you got Home Depot selling Halloween stuff in August, right? And they're all going to have their Christmas stuff up in September because they don't have room to store all their stuff. So a lot going on. Jeff will have it all for you today, 2:00 Eastern time, right there. QR code link in chat. And that's what we got. So thank you to James and Kenny. No Mary. Mary will be back next week. But thank you for watching. As always, chat, a pleasure. Steve, JC, good stuff.
Go get him. Go buy stocks. It's a fucking bull market. Act like it.
The Vegas hate in the chat. I'm surprised.
Okay.
Hating on Vegas. Buy
Yeah,
some
really.
stocks.
Live a
I can't take no loss. I don't even know what it